So, hello. How's everybody doing? Happy Valentine's Day. This is 50 Pips, rocking and rolling, 14th of Feb, 2016. No trade calls, no recommendations. Everybody responsible for their own stuff. And the fact they're in here means you've read, you understand, you accept all the disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. I hope everybody's having a great weekend. Hey, Andres, how's it going? Hello to all the usual suspects. Does it sound okay for everybody? Good. Some had to start this second time round. First time the sound wasn't recording. So I hope everybody's having a great weekend. Hey Abram, how's it going? My pleasure. Always look forward to these sessions. It's always fun. It's a way for me to pay it forward. So more than happy to do these. Hey RagFX, how's it going? So gonna try and keep this as sweet, as short, as concise as possible, so the recording is not too long, too boring for all the people who want to catch up on the recording. But having said that, I have no place better to be than to spend some time with you guys. So as long as we got questions, I'm more than happy to tackle the questions and go through whatever charts we'd want to go through, right? So let's see what's getting you in trouble, Brian. I've managed to get myself out of trouble on Valentine's Day, so I don't want to get you in trouble. So let's get cracking. So as usual, what we're going to do is we're just going to do what we call the jukebox, right? So first come, first serve. Whoever wants to look at a chart, just shoot the chart, and it's going to be first come, first serve. The first one to use the Q&A, tell me a pair. If I've got the chart on the platform, I'll review it. Feel free to ask any other questions you may have, but I'm just going to tackle them in chronological order. So don't need to ask more than once. If you've asked once, it's going to be there. I'm just going to try and get through all of them. Okay, so RagFX. Cable, what's going on cable? Do you have a specific question on cable, or are you just looking for a general review? So our view on cable, right? So I believe we discussed this last time, right? And the way we've been looking at cable is we've been looking at cable apart from, first thing I'd like to mention is apart from it trading fairly technically, here there's a lot of wheeling and dealing with all of the Brexit risk, right? So this is pretty much going to, a lot of it is going to be whipsaw reaction. Remember, we've got that meeting this week, so it's really going to, a lot is going to depend on Brexit risk and whatever headlines come out. So it could be very choppy. So first of all, be careful not to get caught up there, right? So our assumption here was that we were trading very, very heavy on the Brexit market, starting to price in Brexit, et cetera, even though we feel it's not completely priced in. So to get this out of the way before anybody asks, you know, if Brexit confirmed, we'd expect cable to trade more towards the 130, 135. And if all of a sudden we get no Brexit, everything's good, we'd expect cable to trade closer to the 150, 155, okay? Just to give you some kind of idea of the levels. Does that make sense? So technically, this was a very nice move down, right? And once we broke through this previous actually, let's do it this way. Once we broke through this strong previous support, what do we know with support and resistance? We expect previous support, if broken, and if the move is going to be solid, we expect this to act as resistance, right? So what happened? We had this nice little break. Then we actually traded this to the long side on this positive daily close here for a move back into the breakdown zone, right? And we traded this one daily close as a short for a move back into this big level, which, by the way, this is the 50 back of the move from highs, from lows to highs. Okay, so very technical. This was kept, and now we're stuck. Our expectation is that we're not too interested here, as we expect to see an awful lot of wheeling and dealing this week with the meeting, EU meeting, etc. But globally speaking, we've got these two levels set as, you see, we've got the green arrow and the red arrow, the green arrow and the red arrow as pivotal levels. So we'd expect velocity of move inside this range to not mean too much. And we expect that for the next move to start, we need to see a daily close either above this zone or a daily close below this zone. That's what the X's mean, right? So what that means is that if we end up in here, we're not too interested except for range plays, but the price action here will not tell us too much as far as we're concerned, but on a daily close below this level, we'd expect the downside to resume and to possibly resume quite heavily. And on a daily close back above this previous breakdown zone here, right, we'd expect this possibly to continue a rotation back into this descending trend line and for the channel to still be in play. Rags FX, does that make sense? That's the way we're looking at cable, okay? I don't know if you have any specific question on cable, if that makes sense, if that helps, if you have anything more specific you want me to discuss or any other time frame you're looking at, but that's what we would say on cable. Okay. So sure, next pair everybody's asking about is euro. As far as euro is concerned, right? So we're actually short here. I haven't bothered to take the markings off from the weekly webinars, so I mean it's no secret, no big deal. So basically we're short euro on this failure at these highs, on this 4-hour failure at these highs, and we're looking for a move back into 1140s, possibly 11s, right? So we're trade this with basically one lot off into this level, so the trade's already risk-free, no big deal, and we're looking for this to come right back down here. Okay, the way we're looking at euro is that if you remember the daily, we're basically, hey Karen, how's it going? We did cable, so if you're interested in cable, you have to go back and listen to the recording. So euro, we're saying, you know, back above these 11s or 1090s, we expect this to hold a little bit of a bid tone, and you see it's trying to rotate back higher, right? Right here, what we're in the middle of, we're expecting to see a healthy retracement, right? And what we're looking is for the market to try and hold these highs and come back down into this basically 1140s, 1100s, right? This zone. Now, technically, this is going to be an interesting support, previous resistance support. This shaded area is that choppy zone. So as long as we hold above, we'd expect it to try and hold some kind of a bullish rotation. And I'd expect a lot of people to expect buyers to come in here, okay? However, the only thing I would caution you on euro is that if equities get the bounce and crude continue with a bounce, you'd expect to see pressure on, right? Just simply because of the way the flows are trading. So if equities bounce hard and if crude bounces hard, I would not be too interested in trying to catch euro, and I wouldn't be surprised to see euro trading all the way back down into 0890s, 09s, or inside this area if the bounce in crude and equities is very strong. But you do have to respect this resistance right here going into next week. I'd expect the top line resistance to hold unless equities really crumble, and that's the 1360s. And you know, unless equities really move hard, you'd expect this support to hold. And if equities pop and crude holds, then I'd expect this is the kind of range, these are the kind of levels I'm looking at on euro going into next week. Does that make sense? Does that answer your question? Any other comments, any questions? Hey, Hammer Time in the house. How's it going? That's been a while. Hammer Time, hope everything's fine. Good to see you around. Yeah, sure. Okay, good. Yeah, I think that means also if you're looking at USD JPY, what that means is, you know, as we came back down and you see it looks like this 111 is pretty much held, defended pretty much to the pip, right? What we would expect is as long as this holds to see some kind of a little pop or a nice of a rotation back. Hey, really happy to hear that. Good stuff. Excellent. Hammer Time. Wish you all the best. Great stuff. So right here, you know, and this is going to be linked to a certain extent to, you know, how this risk on, risk off is going to trade and what will happen on crude and equities. But if equities can continue to bounce, or in any case, as long as we do not trade or get a daily close below this 111, right? which seems to be the strong protection of that psychological level 110 and what BOJ has been talking about, I would not be surprised to see trading back into the 115, right? And I would not be surprised to see that 115 print very, very quickly. Now, for us to trade aggressively above the 115, then I would expect we need to see either a very, very strong bounce in equities, a very, very strong bounce in crude, and maybe something from the BOJ. But unless we get that, I would just expect the path of least resistance to be some kind of a bounce back towards the 115s, and then we'll have to wait and see, right? Keep in mind that U.S. markets are closed on Monday, President's Day holiday, so, we'll have to wait and see. We do have Draghi speaking. We have some stuff on the wires, but those are the big levels to watch here on yen now. 111 to the downside and 115 to the upside, but this has been moving very aggressively. So just as much as it's been moving aggressively to the downside, don't be surprised if it moves very aggressively to the upside. Does that make sense? Okay, cool. Any comments, any questions on this? And again, it's very difficult to see what's really going on. I personally don't think we really saw intervention at that 111 from the BOJ. Usually, when the BOJ does something, they love to talk about it, right? So you'd expect to see stuff on the wires, but you didn't really see anything official on the wires. So I suspect it might be in some pension fund, somebody checking rates, but I don't think there was any actual intervention. I'd expect that to come in closer to the 110s, but as long as that holds, 115 can come quicker than you'd expect, right? Sure. Yeah, exactly. And if you go back and if you see here, what's really interesting is if you look at equities, remember where we left off on the ES, right? We're talking about these levels in this chart, right? And the fact that we keep on holding those lows, right? Even though it's messy, and remember what we said, it's very tricky because once we put in this weekly reversal here 4 weeks ago, we've kind of been stuck, and it's tricky when you put in such a wide range because anything that happens inside that range, it's really tricky to gauge the next move, right? And even if you see before that, we held, so it's just very, very tricky. So the market's being nervous, but I think what is apparent to me at least is that the market's been holding very, very heavy. Every rally's been sold into hard, but the other thing that is apparent is not only that we've found plenty of sellers to sell into all of the rallies, but on the other hand, what's apparent to me is that we haven't been able to attract new sellers at lows, right? Now, whether you want to talk about conspiracy theories, whether you want to talk about the comments that hit the wires when we're trading at lows. I mean, we could have a really fun session talking about that, but I'd rather focus on the technicals here. But a fact is that we haven't been able to attract new sellers at lows, right? And the market had every chance to smash this down and really rip through these 1800s and try and press towards that 1730. And it hasn't managed to do that. So the issue is that as long as we continue to trade with this action, number one, it's very difficult to trade inside this range. Number two, it's very choppy inside this range. But as long as we can't attract new sellers at lows and break this, it means that it's the odds of some kind of a healthy retracement increase exponentially, right? Now, as we said last time, that doesn't mean, even a bounce all the way back to the 2000 level, the 1980s, doesn't mean this is not going to be that we're going to new highs on the year and everything's perfect and rosy. That could just be a gift from the gods to really sell this hard for the next move down. We still don't know. But technically, what I would say here is that markets had every chance to really crumble, and it hasn't yet. So especially after the action we've seen, what one would expect to see is some kind of a continuation of a bounce to the upside. Now, it's tricky to gauge also because we'll have to see with China coming back to the market this week, et cetera, et cetera. But that's what it looks like for now, right? No matter what chart you're looking at, and even if you're looking at, the 1 hour chart on the ES, look at it here. It's highlighted. What we discussed is the market had ample chance to smash this down twice. We held this strong support, right? Once we bounce, once this support broke, look at this. We come right back into it. It gets sold hard, bam. And what's happening at those lows? Well, this is what's happening at those lows, is that the market's having every single chance to break this down. It's hovering here for ages, right? And it just can't attract the sellers. So this is just a healthy move for now, right? It's simply a healthy move. And as we're coming up now, going into the week, we have to see what happens around these 1880s, 1860s. If the market finds new sellers again, right, descending trend line, moving average, whatever, if it can't find this, then we might take another stab here. But it's starting to look a bit suspect, and sooner or later, you'd expect some of the shorts to say, well, you know what, I'm just going to short it higher. So you might get that pop into the 1900s or the 1950s. But right now, it's looking as good as it can recently for the bulls for a little bounce. We'll have to see, but you still have to respect this previous support that's been acting as resistance, because it's a solid level. But you know, it's been a lot of two-sided action, a lot of volatility, but it's been tricky to a certain extent. Okay. Any comments? Any questions? Yeah, and I think there were a lot of trading opportunities, but still also to a certain extent, a lot of people kind of getting frustrated. So maybe the question is really who's going to throw in the towel first? You know, are the bulls or the bears going to throw in the towel first? Shorter term, it looks like the bears are, you know, the bulls have are trying to get the upper hand for now. We'll have to see how that trades, you know, and to a certain extent, you see that across the board with, you know, Dow Jones holding those lows again, very similar, even though the NASDAQ was holding extremely heavy, right? Look at that, you know, unable to attract new sellers at nose and really press it, you know. So we'll have to see how this trade. DAX, where's the DAX? DAX was holding very heavy, and off those lows, you know, it's starting to rotate back higher. So, you know, it's not everything saved. It's just a healthy retracement in the market that's been holding extremely heavy for, you know, since the beginning of the year, really. That at least that's the way I'm looking at it, right? Any comments, any questions? Hey, Debbie, how's it going? Any chart anybody wants to look at? Anything anybody wants to discuss? Yeah, you know, we've said this before, and I'll say it again. I think in this kind of market, because of the heightened volatility and the aggressive moves, maybe the less experienced trader tends to get excited and wants to press it and thinks they can make the trades of their life. I would suspect the more experienced trader either is pressing, keeping things very tight, or is just trading smaller, adjusting for the volatility, right? Yeah, Aussie, what's going on Aussie? Aussie, we traded Aussie quite aggressively to the long side into that descending trend line, right? We tried to catch it a couple of times at these lows and had a bit of trouble getting stopped out. Even here trying to play some tighter reversal, kept on getting stopped out. And then finally this positive daily reversal played out quite nicely all the way into this descending trend line. Right here in the middle of the range, I just don't think there's an awful lot of edge, right? Now, it does, I think you can make a pretty good case for the long side or the short side. However, it does look a bit suspicious right here in the mid-range, and it does look like it's trying to stabilize here and trying to coil possibly for a break higher, and that would probably be in line with the way crude and the way the equities are trading, okay? If you look at the Aussie just on a daily, and if you look at these moving averages, you see what's happening here, right? So 200 gray, the 100 and the 50, and it almost looked like it was perfect here to get back into the shorts, but you know, trying to get back into the trend trade with stops above here playing this whole area. But look at the wicks, right? Look at the wicks. It looks like it's really having trouble getting traction at lows. So I personally don't think it's very pure either to the long side or the short side here. I think there's a lot of choppy area around this area, right? Probably these lows support, these highs resistance. I'm not a huge fan of this, but just looking at the wicks and the action, I suspect there's a chance of this trying to rotate back higher into this 200, but I don't think it's very, very interesting. It's similar, to a certain extent, it's similar to Kiwi, in my opinion, where you've got a lot of choppy action inside this range. So I think there are a lot more interesting opportunities than trying to get stuck in the middle of the range. Again, remember, Kiwi's fairly lower liquidity pair is very tricky to, it's very easy to smack it around, especially at mid-range. So I don't think there's an awful lot of edge here. At least I'm not that interested in trading here. I think there are an awful lot of more interesting opportunities, a lot more asymmetric risk reward in a lot of the other charts, right? And a lot of the moves, if you just look even on those wicks on the dailies, on the 1 hours, on the 4 hours, it's been a lot of velocity inside range, inside those pits. So I just think a lot of people have been getting chopped up a lot. Maybe some of the shorter term scalpers have been making some pips, but I think people looking for the next move have just been getting chopped up a lot. I don't think there's, I like extended areas, right? Pressing into lows, pressing into highs, pressing into a key resistance, pressing into a key support, not so much chopping around in the middle of the range. I feel I have a lot less edge to engage there in terms of asymmetric risk reward opportunities, and I'm not too interested to get caught up in the chop, and especially when the markets are extremely volatile and the ranges start to move and widen out. The last thing I want to do personally is be involved with lower liquidity pairs, like Kiwi being a great example. I'd much prefer to focus on ES, crude, which seem to be leading and moving a lot more. If I have to go on the Forex, I'd prefer to be involved in Euro or Yen. Okay, that's just me, right? Any comments, any questions? Hey, my pleasure. Any chart anybody wants to look at? Yeah, sure. I mean, crude, right now, it looks like it's trying to, okay, I haven't changed this. Anyway, crude's trying to play some kind of a bit of a reversal to the upside, right? We had a huge move the other day. I think as we were trading at those lows on Thursday, right, and ES was pressing those lows, about to crumble, and crude was pressing those 26s again, and it looked like it was going to break, and the gates of hell were going to open up, and we got all those comments on the wires, right? Those OPEC comments, or those UAE comments. Basically, the only thing, at least in our book, you can do is get long, right? There's not a lot more you can do. You're not going to start pressing lows. We're down from over 100 into the 26s. I'm not going to start to get pressing the shorts when you're starting to see more and more comments on the wires, as it seems fairly clear that everybody's uncomfortable not only with the market but with the crude. So the way we're looking at this here is that, there was a nice chance to try and scalp this for an aggressive move on Friday, or even if you're looking for a bigger move, there's a good chance that we've put in a decent bottom here. Now, keep in mind, we're getting close to expiry. It could be a bit funky. I wouldn't necessarily be trying to chase this long, but as long as we don't go back below Friday's lows, you'd expect to see some kind of a test of the 30s and at least the tens of this descending trend line. And if we can break that with any conviction, those 34s. Now, that doesn't mean it's still not pressured on, right? 3770s is still a huge level, but right here, as long as this holds, we'd expect to see a little more continuation to the upside. Again, keep in mind, we're going towards expiry, so we can get some funky action, but it's similar to what we saw on the ES, what's going on. But this is a kind of interesting example, where getting long there in the 27s, you can get long with a $1 stop, and whether you're looking for a move back into the 30s for a 1 to 3 risk reward, or you're looking for a move back into the 34s, this is a clear example of an asymmetric risk reward profile that we would be interested in trading, rather than being engaged in the middle of the range on Aussie or Kiwi, trying to where's the chart, trying to take a shot right here when we're trading in the middle of the range, right? Not too interesting. Or whether where's the Kiwi chart, trying to take a shot at Kiwi here when it's trading in the middle of the range, it's not something we're too interested in. We're very interesting when Kiwi and Aussie were failing to attract new sellers at lows, but now that they've made that move back, not that interested, okay? Yeah, DAX, we looked at DAX earlier. It's similar to all those other equities. If you had to, if you had to look at anything, DAX is the least interesting one for me, simply because of all the wheeling and dealing on Volkswagen, on the European banks in general, on Deutsche Bank. It's really something I wouldn't want to be interested in. All the equity indexes are trying to play the same way. So I think especially if you're looking for some kind of a bounce, I'd prefer to stick with the ES or the Dow if you had to, rather than anything else. I think the DAX seems to be one of the weaker ones. So I'm really not interested. Right here, again, it looks like it's trying, this is a 1 hour chart, it looks like it's trying to hold this rotation here, right? So as long as we hold above, it looks like it's trying to come back, trying to make its way back towards these highs, towards the 9,000 level, and that will be a pivotal area for whether it's going to get sold off or move right back into these highs. You have to keep in mind you've got this previous support that will act as resistance likely, so that's probably an area it might be trying to move back to. But all things being equal, the DAX is the least interesting. I think here the play is not to press shorts, is to look for some kind of a healthy retracement higher, a bit of pressure off the equity indexes, but DAX is the least interesting for me, right? Simply because of the event risk, the possible event risk that you have to deal with, or tape bomb risk you have to deal with Deutsche Bank or Volkswagen, right? So I'm not a fan. Question, do we have to look at indexes when you're trading currencies? No, not at all. You don't have to do anything. I think especially if you're starting out, I would keep things as simple as possible, and I would look at each chart by itself, treat each chart independently, and keep things as simple as possible, right? If you want to trade indexes, you can trade indexes. If you want to look at indexes because they might give you a tell, or you might look at something to get a feel for the market, you can, but to a certain extent, especially when you're starting off, our view is that that's making life a bit harder than it should be, and that's something we would try to focus on more later down when we have more experience. At the beginning, we try and focus at keeping things as simple as possible. Everything you need to know is on the chart. Price is telling you that, and you can make it as hard or as easy as you want to, right? So then it's a question, it's going to be up to you, okay? Any comments, any questions, any chart we haven't looked at, any chart anybody wants to discuss? Yeah, sure. I think here is CAD. The way we're looking at CAD here is I'm not too interested in trading CAD right here. Was trading this very aggressive again at this extended area. Right here, we're back into the middle of the range. So the way we're looking at it is as long as the 140 holds, right, especially from a day close perspective, and this is probably going to link to crude to a certain extent, but as long as we keep on trading below the 140, we'd expect this to try and make a move towards this 100 DMA, trying to make a move back into this previous resistance that should act as support, where you got this moving average coming in line, which is around the 135 mark. You've got this 200 DMA that's starting to rise and come into this level. So as long as this doesn't break, we'd expect this 135 to attract, right? Having said this, if this goes, then we'd expect more upside. But again, I'd much rather play crude than CAD here, as I think the quick pips were done. It could accelerate, but I think here crude's more interesting. But 140 key level as a Momo line, 135 to the downside, 144 to the upside on daily. This is the broader range we're looking at on CAD. Okay? Make sense? Cool. Yeah, I think we have that up. USD CHF. USD CHF, the way we're looking at this is we're looking at action around this 200 DMA, right? And we're saying, if this starts to close below, then we could get some very aggressive selling, but just keep an eye on this to get a feel for risk on, risk off, how the market's trading. And we'd expect that closes above this 200 DMA to continue to hold some kind of a bid tone in the markets and a possible bounce, right? And you see here, we came down extremely heavy. We closed right above that 200 DMA. Second day, tried to rally, smacked down hard, closed above the 200 DMA. Thursday, smacked down hard, spent most of the day below the 200 DMA, and then closed back above. And then Friday, bam, closed above. So as long as these hold and we do not close back below, we expect this to possibly rally up, right? Very similar to USD JPY. So we're talking about that 115 possibly, as long as those lows hold on yen. Here we'd expect these two moving averages to attract to the upside, right? And see this come here. A lot of choppy action here, a lot of wheeling and dealing. Keep in mind that on very slow days with no data, SMB could easily try and bid this up. But as long as that doesn't get taken out, we'd expect this to try and come and slowly make its way back into this, 98, 99. Keep in mind that this is all exactly pretty much all the same trade, pretty much all the same move, whether you're looking at equities, crude, yen, or CHF. So don't make the mistake of thinking they're completely separate moves, they're completely separate charts, and trade all of them at once, thinking you're keeping your exposure low or your leverage low, because essentially you have one big position. It might move not 100% together, but essentially, if you think you have 4 times 10, well, you just have a 40 position on, right? It's keep that in mind. Okay. Good stuff. So any comments, any questions, any chart we haven't looked at, any chart anybody wants to discuss? Shoot. I think we've done pretty much most of the charts. Again, I'm more than willing to check out any other chart or answer any question anybody has, or if anybody wants to get back to their Valentines and not get in trouble, we can call it a day and have a longer session next time. As I said, we'll do these, try and do these once a month. So I'm more than happy to. Okay, so last chance, last call. Comments, questions, any chart anybody wants to look at? Yeah, this is recorded. The recording will be posted on the blog as soon as YouTube loads it. So it might, depending on how long it is, it'll probably take maybe 5-10 minutes, right? Yeah, I think here, hey, my pleasure, man. Euro GPV. Now, to a certain extent, this is, same kind of action that you're getting on cable, in the sense that this is going to be very Brexit dependent. So be very, very careful, because any headline could really move this, okay? So what's happening here in terms of a bigger picture, you see it's very similar to cable in the sense we broke down very important previous support. We came right back in and it got sold to the pip, right? Smashed down. Right here, when this rally hard, you don't want to sell this on a second test back into this level. You want to let it come to you, right? Let it come to a level. And what you see is this was the next level. If you go back on the blog, we discussed this a long time. We said first time you want to try and catch it here. If not, we expect it to try and move higher, right? And here it's got smashed down here at the 50. So I expect, as long as we get pressure on and there's still talk of Brexit, etc., right? This could really be under pressure, right? So again, and that would mean negative pound. So this could mean that this could easily continue to bounce back into the 81s, right? Again, if the market starts to rally, euro gets sold, as we discussed in the euro chart, you could easily see it right back here, back into this breakdown zone. But again, broadly speaking, I think you've got huge risk to the upside and the downside here in terms of just reaction to possible Brexit headlines, okay? So I would not be too interested in doing anything here, right? Jim, I don't know if you have a specific question, but I would say if you're looking at it in terms of pure Brexit spec play, I think it makes a lot more sense to me to try and trade it through GBP USD, right? So if you're trying to express a view on sterling, I'd prefer to express that view through cable. If you're looking at this because you want to express a view on euro, I'd expect you get a better bang for your buck expressing that view through Euro USD. So once things are a bit clearer in terms of Brexit, etc., on the equity side, then maybe back into Euro GBP for structural swing shorts long term. But I think here you might get caught up in a lot of chop. Okay, does that make sense? Okay, good stuff. Any comments, any questions? Anything anybody wants to look at? Anything anybody wants to discuss? Okay. Rock and roll. Okay, guys. Well, thank you so much for stopping by. I'll post the recording on the blog in about 5 minutes. And again, as long as people show up, people enjoy the content, we'll do this every month. Have a great Valentine's Day. It's been fun spending some time with you. Have a great one and talk to you guys soon, okay? Take care. Thank you so much for stopping by. Bye-bye, guys.